Hello everyone. In today's video, I will try to show you how to present the items of machinery and depreciation when the organization maintains a provision for depreciation account or an accumulated depreciation account. Now, this is the information that we have. Find out the inflow and outflow funds from the details given of Apex Limited. So here we have to show the inflows and outflows of fund of Apex Limited. They have given us the information related to the year ending 31st March 2017 and the year ending 31st March 2018. We have to give the inflows and outflows of funds for the year 2018. So here this column will give us the opening values and this column will give us the closing values of the year. Now the first item that we have is machinery at cost. The opening was 8 lakh and the closing shows here 14 lakh. And this organization also has maintained a provision for depreciation on machinery. The opening shows as 1 lakh rupees and the closing shows as 1,50,000 rupees. Now the additional information which is given to us is during the year, a piece of machinery costing rupees 30,000 on which accumulated depreciation was 10,000 was sold for 25,000. So this machinery, the cost of which was 30,000, and it had an accumulated depreciation of 10,000, and it was sold for 25,000. So let me show you the items, how it will be presented in the cash flow, and also I'll show you the inflows and outflows of funds from investing activities. Now, for this, what we need to do it is, we have to prepare a ledger account of machinery account as well as provision for depreciation account. I have already made the format of the ledger. This is the ledger of the machinery account and the accumulated depreciation account. We also say this as provision for depreciation account. So when you have to make an account, first of all, we will open the accounts by writing. Here we have the opening values of the opening value of machinery. Here it is shown as 8 lakh and the closing value is 14 lakh. So first of all, we'll write this 2 item in the machinery account. So machinery account will have a debit balance. So we'll start from the debit side. We'll write here to balance brought down. The amount is, the opening value was 8 lakh rupees. So we'll write this value here as 8 lakh. That is the opening value of machinery. Now we will also write the closing. The closing value shows here as 14 lakh. So we'll write here 14 lakh. So that will be by balance carried down 14 lakh. So we have the opening value 8 lakh and the closing value of machinery is 14 lakh. So these are the 2 items first of all we'll write. Then we'll also write the opening value of depreciation, which is 1 lakh rupees. This will have a credit balance. So we will write here by balance brought down. The balance, opening balance is 1 lakh. So we write here as 1 lakh. Then we have the closing value is 1,50,000. So we'll write here to balance carried down. Sorry, this will be carried. Okay, to balance carried down 1,50,000. Now we'll see the information what is provided to us. According to the information given to us, during the year, a piece of machinery costing rupees 30,000, on which accumulated depreciation was 10,000, was sold for rupees 25,000. So here we have the sales price. We can have the working note in this way by writing value of the asset at the beginning at the beginning was equal to rupees, that was, here we had 30,000, so we'll write 30,000. Then the total depreciation on this asset till the point of sales was 10,000. So we have 10,000. So we will depreciate the asset. So the depreciation on the asset is equal to rupees 10,000. So it will be 10,000. We'll decrease it. So the value on sale comes to 20,000. So when the asset was sold, the value was 20,000. Now this asset was sold for rupees 25,000. So we will write here the selling price is equal to rupees 25,000. Now since the selling price is more than the value, it will give us a profit of 5,000. So the profit on the asset will be equal to rupees 5,000. So now we have to show these items in our account: depreciation, so the sales, and the profit. So this is how we will present the items. Now the depreciation, accumulated depreciation, we have to transfer it to the asset account. Normally the depreciation is provided in the accumulated depreciation account on an asset. It is not charged in the machinery account. So the depreciation will keep accumulated in the provision for or the accumulated depreciation account, and when the asset is sold, at that time the depreciation is transferred to the asset account. So this is how it is transferred. You'll write here in the accumulated depreciation account, the accumulated depreciation account will be debited and the machinery account will be credited when the depreciation related with the asset is transferred. So this is how we transfer it to machinery account. So to machinery account, we have 10,000 is the accumulated depreciation of the asset sold. So we'll transfer all the depreciation from the beginning till the point of sales of the asset which is sold to the machinery account. Now accumulated depreciation account will be debited to machinery account. Machinery account here is credited. So we will go to the credit side of machinery account and we will write what is the total depreciation related with the asset which was given in the accumulated depreciation account. It is by accumulated depreciation account. So the total depreciation which is transferred from the accumulated depreciation to the machinery account will be 10,000. So the total depreciation of the asset sold was 10,000. Now the next information that we need to take from here is the sales. The machine was sold for 25,000. For sales in the machinery account, we will write machinery account debit to bank account debit to machinery account. So here the machinery account is credited. So we write here as by bank account. This is for sales. Now the amount, the sales amount here is 25,000. We'll write here as 25,000. Now we have a profit of 5,000. So we will write in the machinery account, we'll debit the machinery account to profit and loss account. So we will write here to statement of profit and loss. So to statement of profit and loss account, the profit that we had was 5,000. So we'll write here as 5,000. Now we have placed all the information which is required. Now we are going to close our accounts. Now when we will close our account, let me close the accumulated depreciation first. So when I close the accumulated depreciation account, I can see this side is greater. So I will write here as 1,60,000. Then here also I'll write here as 1 lakh 60,000. So I can see the balancing figure will come here. The balancing figure will be 60,000. This 60,000 is the total depreciation charge on the remaining assets which are unsold. So whatever the depreciation of the current year's total depreciation on the assets which are left is provided here in the accumulated depreciation account. This depreciation, when the organization maintains it, it does not charge the depreciation in the machinery account, which we normally do when we do not maintain a provision for depreciation account. So the current year's depreciation will be charged in the accumulated depreciation account. So we will have here as by depreciation account. So this will be your balancing figure 60,000. Now we will close our asset account. Now when we look at our asset account on both the side, we can find that this side 14,35,000. So we write the same amount here also, 14,35,000. Now this will also give us a balancing figure of 6,30,000. So here we will write against this to bank, where we will be debiting machinery account and crediting crediting bank here, because there was some purchase of asset. Purchase. This will be your balancing figure. So these are the items which are usually shown in the machinery account and the accumulated depreciation account when the organization maintains a accumulated depreciation account. Now, how to present the items in the cash flow statement? Now, let me show you first of all from machinery account, which are the items that will be shown in the cash flow statement. So in the cash flow statement from the machinery account, we will be showing this amount of 25,000, and this is sales of machinery. So any sale or purchase of asset is always under investing activity, and here we can see this also will be shown under purchase of an asset will come under investing activity. So here purchase of asset 6,30,000 will be shown as an outflow of cash under investing activities as purchase of machinery, and 25 lakh rupees will be shown as an inflow of cash as sale of machinery. Now from here we will have this item, and also one more item that will come in our cash flow statement is the profit or loss on sale of an asset. Now this will come under operating activity. Since there is a profit, we will adjust this by deducting it because it has affected the profit. So in that case, it has increased the profit because this is not an operating activity. Under operating activity, we will be deducting this from the profit under adjustments related to non-cash and non-operating items. So this is a non-operating item which has increased the profit. So we are going to decrease this under the head of adjustments related to non-cash and non-operating activity. So this will come under operating activity. It will be deducted, and these are the two items that will come under investing activities. So in some questions, there may be some balancing figure on some other items. So we should be careful when there is a sale. It will be shown here. Accumulated depreciation, which is charged on the asset which is sold, is transferred from the accumulated depreciation to the asset account. So this will be shown in this way. And the items that will be presented here will be, there will be 3 items that will be present in the account. 2 or any one might be in the investing activities, and also we will have, if there is profit or loss, it will affect the operating activities while preparing the cash flow statement. Then for accumulated depreciation account, we can see here the current year's depreciation, that is 60,000 rupees, will be shown under operating activity. It will be added to the profit as it is a non-cash item. It will be added under the adjustments related to non-cash and non-operating activity. It will be added to the profit since it will decrease the profit, we'll be adding this. So this will be shown in the cash flow statement by adding under non-cash and non-operating activity. Now there will be no other items that will come from here. So this is the only item which will be shown in the cash flow statement. I hope you have understood the concept. Thank you.